Hey everyone, this is Will. Welcome back. Hey, here I'm presenting a chart of Netflix, which has earnings today, and this is a stock that has been beaten down pretty bad. So, can we say that is oversold? Yes, definitely it is oversold. Basically, last couple of earnings that he had, as you can see here, and that's these last earnings in January. Definitely, you can see the huge gap down all the way from around 516, then went all the way down to, oh, that's pretty bad, almost 388, 385. And in the next earnings that he had was another gap down, pretty much from where he left off from previous earnings. Uh, all the way down again, one more gap down to 207. So right now we can find the stock that is it is oversold. That's something that's the general consensus that we can see. And for the day today, it's looking pretty strong on the day of earnings. uh, it just broke the $200, and we can see here on the daily chart, and here it says the linear regression trend line, which I love to use here. Gives me a lot of gives a lot of information as far as the behavior of the stock. So it went above that between yesterday and today. Um, it went above that. So it's a little bit hard for me to find myself being bearish at Netflix because the bar has been set very low for Netflix earnings today. So let's see here. Let me delete these fib retracements here. So let me see from this previous swing high here. See what we can do here. I'm going to run another fib retracement from that point, from this swing high, all the way. Let's try to this swing low here. So if you were going to go bullish on this stock today, there's some levels that you can actually use. For example, you had the 217, then you had the 251. So remember those levels. Uh, since we're going to go ahead and jump in here and see where the most activity is right now. So let's see here. The expected move, first of all, here is approximately $31 for this week. So we know how much of a binary event earnings are, especially for a stock like Netflix. So let's see here. So approximately $31. Let's see from 200. Let's see right now. If we round, we can say around 230. Something you could do, you could set up a butterfly here. Uh, I don't recommend necessarily buying calls here, but you can do so, doing that out of the money. But remember that the IV compression that will happen after earnings is huge, absolutely huge. As you can see here, this number, this 213.92%, that's the IV. That number is huge. That number is, I mean, it's yeah. So basically, even though you may be right, let's say you get the 230 calls and let's say the stock moved to 220, you may not get that much of appreciation on those calls simply because the IV crush effect that it will have on those calls at that price, especially if you're still out of the money. So something you can do also, let's see here. You can go here, the 230. So we can think about a butterfly, call butterfly. Let's see here, 10 wide. So you buy the 220 strikes, sell two of the 230 strikes, and buy one of the 240 strikes. So we have to go here. There you go. So you have 1, 2, 1 for the 22nd of July, and they are all calls. You can see the strikes 220, 230, 240, and you'll be paying approximately 86 cents. So if by end of the week, or I'll say even tomorrow, if the price is pretty close to that price, you should be able to have a good risk reward on that trade. So let's see here. So another option that you can employ here could be something like selling some put credit spreads. You could sell them in the money. Let's say selling the 200 and buying the 195. So basically here you have that will be giving you approximately a 220 dollars credit for that, uh, where basically you'll be employing a max loss of 278. So that's a 278 for a credit of $220. So those are some of the options that you can actually employ there. Um, if you want to do it further out of the money, as far as the put credit spread, that's another option. Let's say if you look at the lowest level 162 and use that as a support, perhaps 162. Let's say here at the 162, or even go to the point of control for the last few months, which is around 180. Let's see what you get there. So you can use the 180 also. 181, let's say 175. You get approximately $1.25, $1.25, and collateral 375. So if you do also 180, sell the 180 and buy the 170, you get a credit of 220 also. And your collateral, of course, is going to be a little bit bigger for $780, which is not bad, not bad. But I would be, in this case, I would not do this kind of risk reward. Um, to me, I feel it will be too much risk for the reward that you're getting uh, during earnings. So most times what I would do it at the money or even in the money. Uh, perhaps doing a 205 versus a 195 put credit spread. So that's what I have. If you have any questions, please post the comments, like the video, subscribe, and press the bell icon. So when I push these videos, you're aware of that. Right. Thank you so much. Bye bye.